What's going on, ladies and gentlemen? Welcome back to the channel. So we continue to push on lower in what feels to be a never-ending correction to the downside. So in this video, we're going to discuss the possibilities of a dip buy opportunity, which is likely to happen in the near term. So before we dive into the analysis, consider subscribing to the channel, give this video a thumbs up, and don't forget to hit that bell icon so you'll be notified when I upload the video. So here we are. Okay, we are about to retest that 200-day period moving average on the SPY. We've already broke below the Qs. The Qs have already broken below the 200-day moving average, as we noted in yesterday's video. So if you guys don't recall, okay, I made note of this one obvious thing here, that the markets haven't really retested its 200-day period moving average since June of 2020. So I think at this point in time, we are due for that type of retest, which serves as a good technical reset into the markets and is very healthy as necessary, because that'll give a lot of traders watch this zone. Okay, whether they're bullish or they're bearish, we watch these areas for potential support. So these are our traditional moving averages that a lot of people watch, a lot of people keep an eye on. So it's very important to see how we are going to react once we reach that. So we already see the Qs breaking below it, but now we're going to wait to see what happens with the SPY. All right, so the daily time frame is going to dictate a lot of things as to what's going to happen. So we are still in the primary degree structure. Okay, we're still looking for this wave 4 pullback to complete somewhere between the 23.6% retracement to the 38.2% retracement of this wave 2 to the wave 3 completed. Okay, that comes down to a 436 spot 15 411 range. So it's a pretty wide range. Okay, but we also have another confluence here, which is the previous wave 4. So if you guys are not aware, Elliott wave, right, wave 4s tend to gravitate, of the higher degree tends to gravitate back towards its previous wave 4 of the lesser degree and use it as some level of support. So we have that level of support there, and now we're going to dive down to the 1 hour time frame to see what other fib levels are going to start forming some cluster to sustain this evidence and to sustain this argument that perhaps this zone between 436 and 411 is a good area to buy for the final fifth wave. That could take us anywhere between 500 SPY to 550 SPY. All right, I know it's ambitious, but that's what the fib levels are going to tell us should the market stay within this zone. All right, so let me take you guys down to the 1 hour time frame and let's dissect actually the 15-minute time frame. I have the labels there, and we're going to review price action from November the 22nd high of last year. All right, so let me zoom out, let me adjust scale, and let's go. So from November the 22nd, we completed our primary degree wave 3. Okay, we then sold off into our wave A, our wave B. I think it's not labeled. Here it is. Where is this wave? I think I deleted it. So it's the intermediate wave degree A, B, and C. And let's turn this on, go back to green, and here we go. All right, my bad, guys, my bad. All right, so from the complete of the primary degree wave 3, we got our first A wave, 3-wave pullback to the wave B, which came at the 1272 external retracement resistance of this decline of the wave A. So it's valid from a Fibonacci standpoint. We then got this wave 1, 2, which came in at the 618, I think, 61.8%, or just shy of 61.8, but actually it's 78.6 between those two fib levels, which is appropriate for a wave 2 pullback. All right, then what happened thereafter is that we sold off heavy. So the way we're viewing this structure here to take us down to this final wave 3 before we get this pullback into the wave 4 is that this is the completion of the wave 1, a pullback into the wave 2. And if you remember in yesterday's video, or I think it was the day before, we were looking for a retracement that will take us a little bit further up, okay, up towards the 38.2% retracement, but we fell short of it and we ended up rejecting it. So by breaking the low of yesterday of 451, we confirmed that this is a continuation to the downside. All right, guys, so with that being said, I think it is we are stuck between the correction at this point. We have to wait for this wave 3 to unfold, all right, before we start considering a pullback and a final correction to the downside, which we will probably take a short position once this wave 4 is completed. So what are the downside targets for a short-term wave 3 completion here? So a short-term completion will yield us a 441 spot 51, which will be 100% extension of this wave 1. Okay, that 100% extension is an retracement. Sorry, it's an extension from the high of wave 1 to the low projected to its to the high here. Actually, I have to fix it. There we go. Bam. So delete that. So the 100% extension will be 437.95. So we could start seeing SPY maybe bounce a bit within, if we zoom back down towards a 5-minute, maybe it's an oversold condition. We bounce up to a retracement of this decline, and then we continue on lower. So I am projecting and anticipating for us to see this zone be retested, at which point we see a 3-wave pullback to the wave 4, which we should try to see if it holds below the wave 1. All right, because if it goes further up and invalidates that level, then perhaps that's a good thing. Perhaps we have a completed wave 4. All right, because if we start invalidating and if this wave 4 goes beyond the territory of wave 1, then at that point it's violating the guidelines and rules of a wave 4 pullback. All right, if not, then we are continuing lower. All right, maybe the wave 3 will have completed here. After this completion, after we get the wave 4 pullback, we are then looking for the wave 5. We won't. I'm not anticipating for me to take any trades here. All right, I will wait for this minor degree wave 4. Okay, wherever this lands after we see this cycle complete, and this here where I will take advantage for a downside trade. All right, guys. So you see my game plan coming to tomorrow and next week. Again, I think that we're still good. I think that this market is still bullish. We're just correcting a healthy pullback to reset into the 200-day period moving average. I know a lot of traders are starting their long-term portfolios in January of 2022, and to their surprise, they entered into a bear, not a bear market, a short-term correction. But that's all right, because the good thing is that we have a couple of more months left. We have about 11 months left into the year. The year just started. There's a lot of things that could happen between now and then. So be excited, because this is just temporarily at the moment, unless we start breaking further low. But I don't see it just yet. All right, guys. Okay, so you got your marching orders for the SPY. Let's go over to the Qs. And in the Qs, let's go up to the daily time frame quickly. Review where we are within the 200-day period moving average, just like we did in the SPY. Okay, so in the Qs, we are actually below the 200-day period moving average, and that is a pretty strong candle. Okay, this candle is really strong. I mean, today's sell-off after the first hour of the trading session was pretty aggressive, and so that is giving us indication that this is in fact a 3-wave move down to the wave 4. So let me take you down to a 30-minute time frame, and let's review our wave count and what the game plan is for the Qs. So in the Qs, reviewing price structure out of the November 22nd high, we got our W wave, 3-wave pullback to the X wave at the 78.6. We then have our A wave down, okay, our B wave back up to the 618, wave 1, wave 2, wave 3, wave 4, and potentially our wave 5. Okay, I know that the SPY still shows that has a lot more room left to go, so I'll have to relook at this count, okay, because if that's the case for the SPY, then it is likely that this A wave is not completed yet, and we still have our B wave to go up, our wave Y here, and wave 4 here. Okay, this will be A, B, and C to the Y wave, should we continue on lower on both indices. Okay, so for the time being, we're going to view this as a completion of the wave C, not a completion of an ongoing wave C or wave Y of wave 4, because if I take you back up to the daily time frame, we see that the Qs already have cross over within our range of support. Okay, we have a range between the 23 and the 38.2, which we find a bunch of levels in confluence, right? We have the 100% extension of wave A versus wave B. We have the 1618 of wave W versus wave X, and then we have the 23.6 to 38.2 of wave 4. All right, so this zone serves as a good area of confluence for a pullback support to take us on higher. Additional, we have a previous wave 4 of the lesser degree back here. Okay, so this is a good level or good zone to start loading up, in my opinion, for long-term opportunities, not short-term trades, long-term opportunities, 6 to 8 months, a year into the horizon, into the future, right? For this whole year, whatever. You know what I'm talking about. So otherwise, if you're looking for short-term trades, just give it a minute, give it some thought, let the markets dictate where the trend is going to bounce. So the way we're going to look at this, guys, let me take you down to the 1 hour time frame, because I have noticed one thing. All right, and what is that, Camilo? I've noticed that we are diverging, right? We have made a divergence here in the 1 hour time frame. We made a new low on the RSI here on January the 10th. Price structure made a new low today on January 20th, while the RSI made a higher low. So it is indicative of a potential completed cycle, because our divergences show up when there's a wave 5 or wave C of either up or down. Okay, that shows that there is a potential reversal coming. All right, guys, so keep that in mind. Keep these levels on watch. Let's just quickly dive into the IWM to see where we are. IWM is in bad shape as well. Wave 3 completion here on November the 8th. ABC pullback to wave E. 3-wave pullback up to the wave B. 1, 2, 3, 4, potentially another leg lower. So we have 1, 2, 3, 4, and final 5th towards the sub 200 in small caps. All right, guys. So yeah, thank you so much for tuning in. If you guys left those comments down below on yesterday's video, I left you the link. Okay, so consider subscribing. It's totally free for now, and I'll be taking that link down because it was just momentarily for that little blimp that happened to me while I was recording yesterday's video. It was pretty funny, to say the least. All right, guys. So see you tomorrow. Take good care and be safe out there. It's bloody. Take good care. Bye-bye.